that you've been hearing a lot of different pitches by varying degrees of interesting companies. And it's very difficult, at least I find it very difficult, even after investing for many, many years in this industry, to know which companies to pick, right? So you want to be able to pick the right companies, stick with the right companies, and then know when to sell. Because at the end of the day, if you don't sell, you don't make a profit. So the topic of today is how to pick great companies for massive profits. And I'm going to start this off by kind of giving you a paradox to this, because if you think of the mining industry, or I should say the junior mining industry, as having great companies, then I'm going to tell you the opposite. There are no good companies. And what I mean by this is that you shouldn't treat junior mining as a good business, because it's not. So in general, if we wanted to create a mining company ourselves, we would struggle a lot to make it work long term. The likelihood of actually making a profit in the minerals that you might find is very slim. And it takes a lot of good technical work, good marketing, good everything, and lots of luck. But I want to teach you a few things that I've learned along the way to help you narrow down which companies are good for you. Because something that people tend to think is that there are lottery ticket companies. You see a company out here, and I'm sure that you've seen a few out here, and you're like, yeah, that company. That's the one that's going to allow me to retire. That's usually a mistake, because you can make a lot of money in a company that kind of doesn't go anywhere, and you can lose a lot of money on companies that you believe are certain to work. I've done that before. A lot of heads in the room are nodding right now. They usually have gray hair because they've gone through this. And so if you doubt me, try to do the opposite, and then let me know how it worked out for you. So these are some of the headlines that I picked up to exemplify what I've been saying. Second one is really interesting. How to navigate mining's cash flow conundrum. This was published in 2022. Probably the best year for mining cash flow since a very long time. And still wasn't good enough, because most companies don't actually have positive cash flow. That's a problem. Canada's mining industry is a horror story. This was published back in 2016. This is my favorite headline, a horror story. So how do you make money out of this? Wait and see. So junior mining, and if you get anything out of this presentation, this is the thing. Junior mining is a race between dilution and value. If you don't understand this, you are very, very likely to lose a lot of money. So what happens is when we try to set up a mining company, let's call it Gold Dreams Incorporated, and first row here is going to be the board, second row is going to be the management team. We come together, put a bit of money together, and we go back with the regulators, sign a lot of different pieces of paper that mean probably not much, and then we get a property. Now, a lot of these properties are actually quite cheap. And they're cheap because nobody knows what's on them or underneath the ground. And it's up to you to take the risk and find out if there's any value underneath the ground. Now, there is a problem, because in order to find out if any project is worth anything, what do you need to do? Hat in hand, you go and finance. And every time you go and finance or you raise money for the company, what you're essentially doing is you're diluting the current shareholders, which would be us here at the front and whoever we've invited, friends, families, and fools. And so you're diluting every time you have to raise money, but you absolutely have to raise the money in order to first get geophysics, geochem, geo whatevers, and then find out where to drill, and then to drill, and then to keep drilling, and keep drilling, and keep drilling. That's if you're lucky to find anything, okay? So if you understand this, this can get you very far, because the company will go up and down in price as it goes into a financing cycle, which, by the way, coincides with a marketing cycle. Wink, wink, nudge, nudge. I work with marketing and companies. I should know this. So they go up, and then they come down. And then they go up, and then they come down. And so it's a race. The company needs to create value more so than they're diluting the current shareholders. So if you just hold on for dear life into a company and you don't see them generating the value that's necessary for them to continue, then guess what? You're very likely to lose a lot of money. The good news is, in a paradox sort of way, is that you can make money with any stock, believe it or not. The reason is there's a lot of volatility, like a lot, right? Sometimes you have a large shareholder that has a divorce. They need to liquidate. Guess what? If there's not enough liquidity, not enough volume, then that price is crashing for reasons that have nothing to do with the underlying value of the company. And sometimes there's a stock promotion not even paid by the company. Somebody else is a large shareholder, wants the stock to go up, and all of a sudden, the stock goes up. So the volatility makes it very profitable if you know that you're buying something at a low price compared to the value of the company. And then eventually, you have to sell. So basically, pick your game and then play it well. For example, I tried trading before, and I am horrendous. I used to hold stocks for about 2 weeks at a time. I made a lot of money, lost it all. Learned my lesson, and I understood what my game was. My game, if you want to know, is I look at companies that have a resource. I look at their NPVs. I look at their market caps. If their NPVs are very high compared to the market cap, and I like the underlying commodity that they have in the ground, and they've used good financials in order to get to that NPV, it is very difficult for me to not immediately buy without checking all the other stuff. But that's my game, and that is my game because I am willing to wait for the market to see what I see, and I'm willing to wait. Some of you are not willing to wait. That's okay. Maybe you want the trading game. Maybe you want something else. Maybe you live in Vancouver and your buddies are running these companies, right? Maybe you know that this person doesn't get along with that person, and actually the company is not going to work out because of that. Sometimes there's information that isn't officially insider information that's still good trading information. So I've identified 3 different profiles, which are kind of personality traits. And what happens is most people everybody will have or should have a little bit of all of these different personalities. However, you will naturally fit more into one of those. And the idea that I would like to propose here is that you will be tempted in your investing career to just double down on your own profile. So I'm the next profile over. I'm the psychological profile. And I've done very well just by focusing on that. That's okay. It's not enough. If you want to level up, if you want to actually defend your portfolio from random things that could happen, and everything that can go wrong does go wrong in mining. If you haven't lived through it, then you will live through it very soon. And so the idea is that, yes, you do double down on what you recognize you're good at, and then you branch out, because any one of these little things can actually destroy a project, so beware of that. It's better if you're good at a little bit of everything in this industry. So the technical person will build a network of really good geologists. One guy that was just here in the room and he left, Brent Cook, great economic geologist. He actually has a partnership with Joel Mazumdar, and you should sign up for their newsletter. It's really, really good. And you'll learn about geology. So the technical person will want to learn about the geology. They're going to want to learn about the engineering, and they want to get a full picture. This is very important for me to say. You will have a phenomenon called neurology. So whenever, let's pretend that that there's companies finding lots of lithium in James Bay, right? And so a company finds a lot of lithium in James Bay. Everybody else stakes land around that and says, we are close to this other company. You know, you should invest in us because maybe we have something similar to what they have. that is okay, but a lot of the times you don't have the geological setup for you to actually be able to say that you could also be on that same trend. So basically, another way of explaining this is if you're looking for burgers and you have a burger patty and you have bread on top, bread on the bottom, if you don't have the bread, you're likely not to have the patty. And so structurally, it needs to make sense. Just being close geographically to a property does not make your project likely to have the same minerals that the guys that are your neighbors have. Okay, so that's very important because it's very easy to pull in retail investors that don't have that understanding. I'm not saying I have this understanding, but I can ask people that will tell me, like, look, no, this doesn't make any sense. Okay, it's near it, but it doesn't have the same setup, so they are very likely to hit dusters. Second type of profile is the psychological profile. This is my game. I love this game, and I am willing to play it again and again and again. So the psychological profile is somebody who understands market psychology. I know that this year, this event is a lot busier than last year. Guess when you want to buy more? Last year. Doesn't mean the bull market's over or anything like that, but you have to get a pulse for these things in order to know where you're at in the market. You also understand players and stories. This is probably the most important part within the psychological profile, which means in order for me to buy a stock, it needs to have certain characteristics and it needs to be a good story because I know that I am going to have to sell this stock to somebody else, and that somebody else needs to buy into the story just in the same way that I'm buying into it, right? So some of these characteristics are a good team. A team that has done something very similar before is just doing it again. That gives you massive amounts of points. People love that in mining. In mining, you don't want to innovate in almost anything. You just want the same guys that have built a mine in Quebec to build a mine in Quebec. That's it. Very, very simple. And the bigger the mine that they've built, the more money that they've sold it to, that makes it, more and more points. Awesome. And the other thing that also makes a really good story is the NPV, because it's numbers. If I show you that there are projects out there worth $2 billion NPV, and current market cap of the company is maybe, I don't know, 300 million, that to me is great. It's pure numbers. If you believe the numbers, if you believe the feasibility studies, it's cheap. How can you argue against that being cheap, right? As long as, the risks involved are fairly low, it should be an easy buy and an easy sell when it comes time to actually sell it. So that's the psychological person. Really goes into the unloved niches, such as uranium. I am not going to talk about uranium today. If you want to hear me talk about uranium, come back tomorrow and I'm on a couple of panels. And this person can usually hold for years because they understand the market and they are not afraid to go against the grain. Everybody knows if you're not a contrarian, you're a victim, especially in this market. So that's the psychological. And the last one is financial. There aren't many people who are very strong in the financial sense when it comes to reading, P&L and balance sheets and everything, because in junior mining, like I said, it doesn't make much sense. We have to dilute in order to build any value whatsoever. And so your balance sheets are going to look like horrendous. But what you must do as an investor, if you don't want to get taken to the cleaners, and not in a good way, is to understand dilution, watch when insiders are buying and selling, try to understand the reason why they're selling. Sometimes it's legitimate, sometimes it's absolute BS. And you need to understand when warrants from the last financing are coming free trading, because that will really impact the price that you pay for your stock. Also, the financing terms, I have seen companies in really good markets give really long full warrants. It sometimes, I'm not gonna lie, is a favor to their friends. That's it. That doesn't really make a good business. If you're one of the friends, good job. maybe you get in on the financing. But for everybody else, it's more and more dilution. So something to think about. Also, like I said, NPVs versus the market cap of the company. Also, the IRR. So the internal rate of return for a company, there's a rule of thumb. Nobody can tell me exactly why, but it's preferred that that is above 20%. When it's a PEA, which is more preliminary, I like to make that maybe 25 and up, because I know as we get to pre-feasibility studies and feasibility studies, that number might actually go down. And so I want, a little bit of fat to burn there. I want there to be a contingency. And you got to understand promotion cycles. If you start seeing a company everywhere, they're spending money on it. Why are they spending money to promote the company now? Do they need to raise now? Do you want to get in on the raise? Is the raise going to be too expensive because the promotion worked really well? Or do you want to start buying as they're starting to promote because you know that the price is going up? Or do you want to start buying after the promotion season is done because nobody's buying the stock again? These are some things that you really must take care of, because this is usually the difference between buying low and selling high, and you got to watch it. So the idea is that, yes, you can double down on what you're already strong on, but you cannot ignore any of these points within the 3 different profiles. So you can make a lot of money with being really good at one, but you cannot make any money long-term with none of the other 2. So do pay attention to that. And that's basically it. So these are the rules. Don't marry any company. Companies are not girls you marry. They're girls you kiss, or guys, okay? Profits can be made from any company because of volatility. It goes up and down, and you can still make money regardless of the quality of the underlying projects. Understand your personal profile, double down, and then you fill in the gaps with the other profiles. You learn the stuff you don't know. For me, I need to get really good at the technical stuff, right? That's a weakness of mine, and you can keep that weakness for some time, but you can't really go long-term with that weakness, because the technical side of it can really wreck a project very, very easily. I've seen projects not work because of the most bizarre things. Salmon fishing, turtles in the area, right? Cancels the whole project. Things like one person did one wrong calculation for the whole feasibility study, and it's an economic mind because of the one calculation. There are many things that can go wrong, like I said. So fill in the gaps with all the other stuff. This is the one thing that you have to ask yourself whenever you're buying a company, especially a larger holding. This is the bottom line. What do you understand about this company that others don't, but will? If you can't answer that question, maybe you shouldn't buy the stock. Maybe you should wait a little, and you should look around and see if there are any other companies that you could say, yeah, I get this, and other people will get it too in due time. That's pretty much it. I'm on Twitter at The Next Big Rush. There's also a really cool newsletter that I publish. It's just about 3 to 5 minutes worth of reading of mining news, mining and energy news that happens every single day. And it's called The Next Big Rush, mining news with an ounce of humor. Sometimes there's humor, sometimes it's just lame, and it's free. So if you don't like it, you unsubscribe and you get all your money back. Thank you.